Hi guys, welcome back to Everything Business. And as was promised, we are going to be looking at the returns journals, right? If you have not seen my video on purchases journal or purchases daybook, and the sales journal or the sales daybook, right? Then I will leave the description. I will leave the link for that video in the description, and you can just watch until the end of the video. Then you will see those videos will pop up. All right, but you need to watch those videos. So let's talk about the returns journals. All right, really quick. So we have the purchases returns journals, which is also called the returns outward daybook. So it's the purchases return journal or the returns outwards daybook or the purchases returns daybook, right? Whichever way you want to call it. Now, what is this book used for? It is used to record goods returned to suppliers, right? Now, when you're talking about returns outwards, you're sending back goods to your suppliers that you are unsatisfied or that you are dissatisfied rather with, right? Now, when you're sending back your goods to the suppliers, right, then you have to send back what is called a debit note to your supplier, right? When you're sending back goods to them, the debit note will inform them of the amount of goods and maybe the reason why you're sending back the goods, right? The book is linked to the purchases ledger because we're talking about our suppliers, right? Or our creditors. And the purchases ledger is where you'll find their accounts, right? The total on this book is transferred to the purchases returns account in the general ledger. All right, so you need to remember these 4 points and you're good, right? Now, the opposite will be true for the sales returns daybook, or we would call it the returns inwards daybook, or you can call it the returns inwards journal or the sales returns journal, whichever one, right? You can call it. All right. So this book is used to record goods returned to the business by your customers. For the same reasons why you would return goods to your suppliers, customers can return goods for the same reason. When customers return goods to you, you will have to now issue what is called a credit note, right, to your customers, right? The credit note will inform the customers that you have received the items that they would have sent and that their account would be credited, which would mean that it would reduce the amount that they owe to you because obviously they are sending back goods to you. So the book is linked to the sales ledger because that is where you'll find your debtors or your customers' accounts, right? The total on the returns inwards daybook is then transferred to the sales returns account in the general ledger, or you can say the returns inwards account in the general ledger, right? Pretty simple concepts. So let's look at an example. So looking at this example now, right? This is an example of a purchases returns journal or the returns outwards daybook. So let's look at them. It says May 15, goods previously bought on credit from P Parking returned as some was damaged, $60. Right now, if you look at your purchases at the purchases returns daybook, you realize that it is drawn up in the same way. Remember, in my previous videos, I said that all the journals are drawn up in the same way. All right, so you have a date, you have your suppliers in this column, the folio, to show where the other side of the transaction is, right, and the amount, right? Now, in some books you will see they have what you call like invoice numbers, right? Invoice number would be beside the folio, right? So if I was to insert another column here, right? If I was supposed to insert another column, it would be the invoice number, but in this case, it would not be invoice, it would be the note number. All right, so that's the only difference that you would pick up. All right, so you would have the folio, and then have the note number, then the amount. All right, but this is basically what is needed here. So you have May 3, the name of the supplier, P Parking, right? Because he's the one returning goods, you're returning the goods to, right? And the other side of the transaction is in the purchases ledger, right? And then you put in the amount, which is $60. All right. Now, in the purchases ledger, right, P Parking's account would be debited in this instance, right? Because we are sending back goods to him. So he is receiving goods per se. Or you can look at it and say, well, P Parking, who is a creditor, right? To increase a creditor account, we would make a credit entry, but to decrease it, we would make a debit entry. So we want to decrease it. That is the reason why we make a debit entry. So May, it's not May 3, it is May 15. So May 15, this is from my last example, right? That is the reason why it is there. So May 15, and the amount, the details, sorry, you would put purchases, returns, or you can put returns outwards, whichever one is still acceptable. All right, and that's it for that transaction. The next one, May 19, goods previously bought on credit from A. Allen returned for $50. The same procedure would apply, right? So you put the $50 there, and then you're going to balance off your purchases returns daybook or your purchases returns journal with the same narration. So you're going to transfer to, let's use returns, transfer to the returns outwards account, right? And that is in the general ledger, and this amount would be 110. All right, let's debit Mr. Allen's account, so May 19, and you would write the same information, purchases, returns, and the amount is $50. Now in the general ledger, we are going to have our purchases returns account. So the purchases returns account, right? The returns outwards account, right? Now the purchases returns account is always credited. So we're going to put the information on the credit side, right? So you go May 31, total returns outwards for the month. You can just write out the whole word, returns outwards. And then the amount is what? 110. And you can double line this $110. Just like that, easy peasy, right? Easy peasy. Using those same concepts for the sales returns daybook, right? It says June 5, goods previously sold on credit to M. Dillon returned as, and I want to show you how you would insert. I want to show you how you would insert the other column. You would put the note number. So for example, beside the folio column here, you would have another column before you reach the amount. That would be for invoice, and in this case, it would not be invoice number you put here. You would put the folio number, right? Not the folio number, sorry, the note number. All right, so June 5, goods previously bought on credit, goods previously sold on credit to M. Dillon returned, right, as she found some of the goods to be faulty, at least $10. So you put in the information, pretty simple. June 5, M. Dillon with the customer, sales ledger, right? You know, if they give you a folio number, you put the folio number there. You would put the note number on the credit note if they give you that information. All right, a lot of times they don't give you those information in the exam, right? They just ask you to show these what you see right here. Then you have June 8, goods returned by F. Jacobs for $30. So goods returned by Jacobs for $30. So you put in the date, June 8, F. Jacobs, sales ledger, $30, right? The total there would be now what? $40. The narration at the end of the month would be to transfer to sales returns account, and it is in the general ledger. Let's go over to the sales ledger. These guys are your debtors, which means that they're assets, right? Generally, you would debit their account, but when we are sending back goods to them, right? Sorry, when they are sending back goods to us, their account would be credited because they are sending back goods to us. So that's June 5, and the amount, the information that you'd have in the details is sales returns, and then the amount $10. The same thing will go for Jacobs, June 8, sales returns, and then the amount is $30. In the general ledger, you're going to show your sales account. So you have your sales returns account, and sales returns account is always debited because it is always receiving, right? It is always in the sales returns that your customers send. When they send back the goods, you record it there, so it's always receiving. So you go June 30, total returns inwards, or you could write total sales returns. I'm just using the terms interchangeably so that you can become familiar with the terms that are used, so that you don't miss in the exam. And you double line the amount like that, and there you have it, right? The returns journals or the returns daybook. All right, so I want to thank you for tuning in, right? My next upload will be on Cashbook, so stay tuned for that, right? 2-column and 3-column Cashbook, and if you don't know how to do that, then you need to see that video. Share with your friends, leave a comment, leave a like, right? And let me know what topic you want me to do so I can start working on it. All right, you take care and walk good.